Hi, are you 62 years of age or older and you want to enjoy your retirement years in beautiful Florida weather? Or maybe you're in South Florida now and you want to tap out your existing equity, have a brand new, beautifully built custom home, cut your taxes in half, your insurance in half, and live in Florida's fastest growing retirement community, Harbor Hills in Lady Lake, Florida. If the answer to that is yes, let's talk about a very solid financial option for you to make that happen. It's called FHA's Home Equity Conversion Mortgage, better known as a reverse mortgage. A conversion mortgage is a very misunderstood product that has a much broader reach and more benefits to those 62 and older than illustrated on TV. The conversion mortgage, better known as the HECM product, can certainly be used to increase a consumer's monthly cash flow. That's a given. But in addition, the HECM for purchase program is a great way for those who are 62 and older to consider buying a home or building that dream retirement home that you've always wanted in beautiful Florida. With over 8,000 people turning 62 each day, 3 million annually, you need to be informed on all the options that are available to you. So first, what is a reverse mortgage? A reverse mortgage is a special type of home loan that lets you convert a portion of the equity you have in your home into cash. The equity that you built over the years making mortgage payments can be paid to you. However, unlike traditional home equity loans or second mortgages, HECM borrowers do not have to repay the HECM loan until the borrowers no longer use the home as their primary residence. And you can use a conversion mortgage to purchase a primary residence. Now at Harbor Hills, we allow you to even use our new build program to build your dream retirement home just the way you want it, giving you your dream retirement home with much more cash on hand versus paying with 100% cash. Now watch. Let me give you a quick example so you can see how this works. Let's say someone from New York wants to retire right here in beautiful Harbor Hills in Lady Lake, Florida. They sell their house in New York and end up with $400,000 to finance their next home. With a traditional mortgage, they would have to come up with a down payment, pay for closing costs, and make monthly payments for the life of the loan. They could also pay cash, which eliminates monthly payments, but that option puts a ton of cash into the home, which could otherwise go into your pocket, your bank, or a better investment strategy for you, a more liquid, better yielding investment. Now, the purchase program using a conversion loan allows you to put roughly 1/2 or 50% down into your new home, keep the other half, and never make a mortgage payment again on your new home. So now let's go back to the example of the $400,000 sale of your home in New York. Let's say you wanted to build a $300,000 retirement home. A 70-year-old would need to put a down payment of approximately $147,000, roughly half. This would leave about $253,000 from the $400,000 sale of the home in New York to put in his or her pocket when they left New York versus only having $100,000 cash at their new purchase. In addition, you would have zero mortgage payments, zero, ever again, done. You're just responsible for taxes and things like HOA fees in your new establishment. Now, when you either move or both spouses pass on, the house is sold, the loan is paid back. Additional equity goes to your estate. If the house is upside down, it's insured by FHA, so no, your heirs have zero liability, nor would your spouse. If you had unfortunately passed away, they would never have to worry about a mortgage payment. This program also allows you to have control over your cash. Why put it in your retirement home when you can use it to either enjoy a phenomenal lifestyle or put it into another investment that gives you both liquidity with a higher yield? And even better, because this program requires you to purchase a finished home, Harbor Hills has a special program that allows you to build a new home and still use this program, something that very few retirement communities provide. Ultimately, the question you have to ask yourself is this: do you want to leave behind greater equity, perhaps even a fully paid off piece of property to your children or grandchildren or not? Because if the answer is no, this makes a ton of financial sense. And research shows that over 90% of children want their parents to enjoy the fruits of their many years of labor and sacrifices, to enjoy every day, live life to its fullest. To be eligible for the FHA program, the reverse mortgage, or the HECM as it's called, number one, you have to be a homeowner 62 years of age or older. Number two, either you must have your existing home paid off outright or have a low mortgage balance, one that can be paid off at the closing with proceeds from the reverse mortgage. Number three, you have to have minimal financial resources that shows that you can pay ongoing property charges in your new home, including taxes and insurance, etc. And you must live in that home. It must be your primary residence. Below, I've included a link to a website that you can go to for more information and a phone number you can call to inquire more about reverse mortgages. Thanks for watching this video. I hope it helps. Have a fantastic day.